Let's go to CBS News financial contributor Mellody Hobson, who joins us from Chicago. Mellody, thanks for being with us.
Thanks for having me.
So what do you make of the gyrations that we've seen? Down more than 1,000 at the open, now sort of clawing its way back. I'm looking at a screen here. There's actually a couple of companies on my chart that are in the green.
Well, it certainly is a wild day, that's for sure. I think many of us woke up expecting this to be a tumultuous day because of what we saw in China and overseas and in the overseas markets. But I think that the bottom line is rationality is prevailing. People really do realize that the U.S. economy has been in relatively good shape compared to the rest of the world, and U.S. companies are actually in very good shape, meaning their balance sheets are very clean, they're being run in a highly efficient manner, and they're certainly, having lived through the financial crisis, in a much better position than they were before.
Yeah, Mellody, I'm sure you're having to deal with a lot of clients, a lot of investors who, when they saw what we're showing on our screen right now, which is a time-lapse video of the market descent this morning, said, oh man, what do I do with my portfolio? Is there something that I should be doing? And you were probably advising clients, look, this is, as you point out, the fundamentals in our economy and in the companies that are on the markets are very, very strong right now. And the worst possible thing you can do, obviously, is to decide to sell something when it's going down so dramatically.
The worst possible thing you can do is sell into a panic. I love the line by the former chairman of the Vanguard Group, which is the big mutual fund company. And he has a line that during financial periods that are very, very tumultuous, he says, don't do something, stand there. And I love that line. You should stand in these kind of markets. You don't try to bend and gyrate with what's going on, or else you'll find yourself losing a lot of money.
You know, I was also curious to see, there was a tweet out by the former U.S. Secretary of the Treasury, Larry Summers, pointing to perhaps some worries down the line. But, you know, people seem to forget 2008 and 2015 are very, very different. And Josh Earnest just basically said that. Part of the problems that we saw in 2008 is we saw a lot of banks that were over-leveraged. And he points out now there's been some legislation that's been passed, and a lot of these banks now have some $600 billion in capital reserves. So we're not at the same point that we were back in 2008.
These are totally different scenarios. I mean, first of all, the financial crisis was led by American housing and the debacle that we had there back in 2008, and it became contagious, and it spread around the world. And there's that old saying, when America catches a cold, the rest of the world gets pneumonia. Well, we had pneumonia, so the rest of the world was in a tough spot. This time, you're seeing the trouble come from the emerging markets, and most specifically China, where there was this sense that Chinese growth was going to fuel global growth. And maybe that story is not as exciting as we all thought it might be, and people are then readjusting their point of view around that economy, as well as the contribution it might make to the rest of the world, and U.S. companies being, part of that story. So it couldn't be more different.
And yeah, I think a lot of analysts would agree with you, Mellody. And I guess the other big question that people are going to be looking to now is what the Federal Reserve will do. There had been talk that now, because interest rates had been so low for so long, that markets were strong, the economy was strong, that the Fed was possibly going to raise interest rates. Now, do you think that that is still the plan, or are they going to be looking at what we've seen over the last couple of days and say, maybe we should hold off on that?
Well, as I said this morning, I'd hate to be Janet Yellen or a member of the Federal Reserve Board, because this is really a tough scenario. On the one hand, you're looking at economic statistics in the United States that look pretty good. Jobless claims are at historically low levels. You're seeing housing starts at 8.5-year highs. You're seeing consumer prices that are up. You're seeing U.S. companies holding tons of cash. So again, overall, that picture looks pretty good. And albeit the U.S. growth is slow, but it is steady. So that's what she's looking at on the one hand, and the other Fed governors. On the other hand, we're seeing this Chinese and emerging market story play out. Barron's this week called them submerging markets instead of emerging markets. And the idea that if you raise rates right now, could it tilt us or lead us down a more negative path? My guess, and this is purely a guess, no one knows, is that the better thing to do would be to do nothing right now. When in doubt, don't. But again, I think at some point the Fed will raise rates. She's made that very clear. And it's just the question is it September as we all thought, or is it going to be pushed out until later in the year or perhaps next year? But rates are going up at some point.
Yeah, and Mellody, before I let you go, I just want to ask you one final question on China. As we look to China's opening later this evening on the East Coast, this is still the world's second largest economy, 1 billion consumers, essentially, right, in one country. The risk inherent in China, I think everybody understands that now. But if you are going to be in the emerging markets, and if you are the type of trader or an investor who has that kind of risk capability, China is still a place that you want to be or not?
Well, I'm always nervous about when there's a lot of hype around any environment. And certainly the Chinese stock market, until it had its most recent comeuppance and being down almost 40% in the last few months, was on fire. That makes me nervous. The other thing, when something is the greatest thing since sliced bread, which China has been sold as, I remember someone telling me this was going to be the age of the Pacific. That this is going to be the time for China. I'm not saying that's not true, but there's just a lot of very high expectations around the Chinese economy and those billion consumers. And I think as a value investor, I want to buy when the hype isn't so big. So it's probably more attractive than it was, but there's still a tremendous amount of uncertainty in these emerging markets, and you have to accept that. Not only political uncertainty, but also economic uncertainty, as we've seen. So I would be very cautious.
Fantastic analysis, Mellody Hobson. We appreciate it so much. Thank you very much.
Thanks.